Right now, somewhere in Brazil, someone is buying a loaf of bread, and the government already knows. Not next April, not when somebody files a return. The instant the cashier hits enter, an invoice flies to a state server, gets stamped, and becomes legal. Or the sale doesn't exist. Every transaction. In real time. The IRS can't see a fraction of that. And here's the part nobody tells you. Brazil only built this because its taxes were the worst on earth. Let's start with the pain, because the pain is the whole reason this exists. A company in Brazil spends, on average, about 1,500 hours a year just complying with taxes. 1,500 hours, that's roughly 10 times what a company spends in a rich OECD country. And about 5 times the Latin American average. For comparison, Mexico is around 290 hours. The OECD average is under 200. Brazil is 1,501. Why so insane? Because you're not paying one tax, you're paying a stack. Federal taxes. Then a state tax called ICMS. And there are 27 different state versions of it. Then a municipal tax called ISS across more than 5,000 cities, each with its own rules. Same sale, 3 levels of government, all watching, all wanting their cut. People here literally call it the tax madhouse. So put yourself in the government's shoes around 2005. You have the most complicated consumption tax on the planet, and you're enforcing it with paper. Trucks crossing state lines with carbon copy forms that may not match what gets reported months later. The gap between what was declared and what actually happened was measured in billions. It was unenforceable, and that desperation is what forced the invention. In 2006, Brazil launched the Nota Fiscal Eletrônica, the electronic invoice. And it didn't just digitize the paper form. It did something far more aggressive. Most countries let you issue the invoice, then report it later. Brazil uses what's called a clearance model. Here's the difference, and it's everything. Before a sale is legal, the invoice has to be sent to the tax authority and approved in real time. The government validates it, stamps it, and only then does the transaction legally exist. No approval, no sale. The goods can't even leave the building. So the report isn't a separate thing you file. The clearance is the report. Every invoice cleared by the state the moment it happens. Now scale that up. Brazil has collected over 25 billion electronic invoices in about 7 years. In 2020 alone, more than 3 billion. It is, by a wide margin, the largest invoice database in the world. The Brazilian government isn't sampling the economy. It's watching all of it live. And this isn't just for big companies. The bakery selling you bread runs a consumer version of the same thing. You buy the loaf, a little invoice gets cleared by the state. That money exists in the government's records before your receipt finishes printing. This is the part that breaks an American brain. So let's go there. The United States is the exact opposite, and not by a little. The US has no national consumption tax, no VAT, nothing. Sales tax is handled by the states. More than 12,000 separate taxing jurisdictions. There's no national electronic invoice, no real-time reporting. The federal government does not see your transactions as they happen. It sees a summary, once a year. In April, filed by you through software you paid for. And here's the timing that makes this sharp. In late 2025, the IRS told the states that Direct File, its own free filing tool, will not be available for 2026. The country that invented Silicon Valley is making it harder to file taxes online. While Brazil clears tens of millions of invoices a day, in real time, for free. I want to be careful here because this is not me cheering. This is the rare case where the emerging country is a full generation ahead of the rich one. And the reason is almost funny. Brazil is ahead precisely because its problem was so much worse. The US never built this because it never had to. Brazil built it because it was drowning. Constraint forced the invention. That's the pattern of this whole channel. And here it shows up in the most boring place imaginable. Now, 2026. Because the story just got a second act. That invoice machine was the old layer. This year, Brazil is rebuilding the tax itself. In December 2023, the country passed its first broad tax reform since the 1988 Constitution. 30 years of arguing finally done. It collapses that stack of taxes into a dual VAT, a federal one called CBS and a shared state and city one called IBS. And starting January 2026, it's live, in test mode. Real invoices now carry the new taxes at tiny rates, running alongside the old system while the country debugs it. But simplifying the tax isn't the part that should make you sit up. It's called split payment, and it's the closest thing to fiscal science fiction I've seen. Normally, the seller collects the tax from you and is trusted to pass it on later. That trust gap is where most tax evasion lives. Split payment deletes the trust. When you pay an invoice, the bank reads the tax amount written on that electronic invoice and splits your payment in two automatically. The net goes to the seller. The tax goes straight to the government. In the same instant, the seller never touches it. And here's the detail that ties this whole channel together. Phase 1 of split payment runs on Pix, Brazil's instant payment rail, the one I covered back in episode 1. So the instant payment system Brazil built for convenience just became the collection arm of the tax authority. Payment and taxation fused into a single transaction. The test environment opened in April. Production went live in May 2026. An American still mailing a check to the IRS cannot picture this. Okay, now the part I'd be lying to skip, because everything I just described is also the most complete fiscal surveillance system on the planet. The same machine that makes evasion almost impossible also means the state sees every transaction you make, as you make it. Efficiency and surveillance aren't opposites here. They are the same muscle. And simpler does not mean cheaper. The reference rate for this new VAT lands around 26.5%, among the highest standard rates in the entire world, up there with Hungary, well above Europe. So let's be honest about the trade. Brazil didn't build a tax utopia. It built the most advanced tax technology on earth. And the price of that visibility is your privacy, and one of the heaviest tax loads anywhere. That's the real story. Not Brazil good, US bad. The worst tax system in the world forced the best tax technology in the world. And those two facts are the same fact. If you saw my episode on Pix, this is the other end of that wire. Brazil built a rail to move money in a second. Then it quietly wired the taxman onto the same rail. The lesson isn't that real-time government is good or bad. It's that capability and control come bundled. You rarely get one without the other. The US gets to file once a year on paper because it never felt enough pain to build a machine. Brazil felt all of it, so it built the machine, and now it lives inside it. I'm building from inside this, from the Brazilian trenches. If that's interesting to you, stick around.